I don't want to keep this sort of super light and easy. I think let's start with some hard questions, right? So disruption based on AI in banking in Asia and in finance in general. Will it come from startups or will it come from sort of the established financial institutions?
Okay.
I mean,
so my perspective, it is on the both sides. Of course, the financial institutions, they are big corporates themselves, and they have all the funding and the network that they can make it happen. Having said that, disruption in AI has already started way back. It was 8 years around that when financial institutions started looking at AI as to perform improvements to their systems. Currently, what is happening is fintech units, they have their niche solutions which can add more leverage on whatever is existing on AI for banks. So that's what is currently happening. So it's more into a collaboration model right now. That's why you see that each and every bank, major bank in the world, they have their own fintech and innovation groups. They're looking at the solutions at the new startups.
I was just about to point out that you would say that, given what you do for a living with the Vault, where it's like.
Okay, so what we do at the Open, we call it the Open Vault, which is basically a fintech and innovation group for OCBC. Our perspective is, yes, we are keen. We are looking at the ecosystem. So when we say ecosystem, in the fintech sphere, it's not only about AI, it's also about the other hype, which is blockchain. That's like a cliche, but so our unit has been formed like last year. We are pretty new. We are running a lot of industry projects driven by MAS, which is our regulator. We are blessed actually. Not many countries have that kind of regulator, open-minded and easy to, and pushing the banks to experiment with. So the collaboration front, what we do is we run accelerator program to look at new solutions that can be taken into bank, including AI.
Okay. So Varun, how does EY work with the sort of fintech nascent ecosystem?
So with regard to AI, so there are two parts of it. There can be the technology part of it, where you have the algorithms, where you have different ways to look at the same data. But then FI will always have more data than any of the startup when it comes to, because any of the algorithms needs to be tested on that data. You need to pull out from that, pull information, pull trends out of that. And a startup sitting in a garage can have probably the best algorithm in the world, but unless you have enough data, you cannot build anything on top of it. And that's where there are alternate sources of data which are not sitting in an FI. For example, data which you would pick from dark web, data which you would pick from social networks, data which you would pick from email inboxes of people. So Uber use one of such subscriptions to track, understand what their customers can do or the preferences. So startups bring their own capabilities, but one thing which they never have is the FI data. FIs have their own technology capabilities, but their biggest advantage would always be the consumer data they have regarding financial transactions. At EY, I head fintech practice for ASEAN, and my job is to be the bridge between both sides of the world, between the fintech world and the FI world, because I come from the fintech side of the industry, where understanding how startups operate, what are their strengths, what are their weaknesses, while helping them collaborate with the large FIs. And again, there's some places where they need to compete. So from my position is, I'll help both sides compete whichever way they can, and where they can collaborate, I'll help the collaboration. And if they don't want to collaborate, I'll help both of them grow.
Okay. But so you're basically claiming that startups will come and go, but the financial industry and the large FI institutions, or FIs, will sort of be kingmakers in that they pick and choose the ones they give access to their data.
Banking and prostitution are the oldest professions. Enough wars, enough civilizations, enough cultures, religions have come and gone. They're still alive.
Mm-hmm. Fair enough. So is there anything that you see clearly existing outside the existing FIs where they are less likely to go, given the conservatism, perhaps?
It's not conservatism. It's a question of what's the opportunity cost. It's not that it's a question of, yes, can you do it? Yes. is it worth doing it in the time? Because everyone has a different cost of equity, different cost of returns. A lot of startups have a lot of VC money where the benchmarks, you don't have quarterly analyst reports to answer to. Your portfolio companies will be answering in a closed room with you. They will not have 120 analysts glued in with live beam on CNN, Bloomberg, CNBC. And which is why those are very two different environments. So it's not a question of can you do it or can you not do it? It's a question of is it worth doing it? Is the technology, let's take example, chatbots. Is it worth a bank's time and energy to design and build it from scratch? A bank's job is not to understand the normal queries. That's something someone else can do better. A bank can also make coffee cups. Are they going to start making coffee mugs? No. They can buy those. It's not the core business to make coffee mugs for a bank, even though no matter how much coffee they consume.
Fair enough. But there is also, like, you mentioned MAS before, right? The sandbox initiative is really nice, but doesn't it sort of force startups to work with an existing FI to get sort of into that blessed sandbox?
Well, it's not like mandatory that you all have to come to MAS to get their blessings. It's about the ecosystem. That's the key, right? So when it comes from regulatory or the government is pushing the front, then it suggests to you that the ecosystem is ripened or matured enough for the startup to grow. And also on the banking front, right? We are, to say, if you talk about words like agile or API, it has happened 20 years behind in industry, but banking is still evolving to get it. The reason is, again, coming back to his point, cost.
Yep.
Once we deploy something, the amount of cost and people who are using it is in millions. And if you want to change that because some startup is cool and doing it, it's not worth. So if it is coming from MAS, which is our regulator, guys, I'm also pushing you, do it because this is the future. This is how we will gain efficiency. So the ecosystem is there. That's the push.
See, a lot of it is noise about a lot of this stuff. Bottom line, it comes back to whosoever is the stakeholder, he needs to have a business case around it. A bank, if he sees that they can make money or they can save cost, you don't need a regulation you don't need a push to do it. And it's simple. If as a FI you can make a business case internally that there's technologies, there's business sense to do it, you can. What a regulator can do is sometimes soften up the resistance inside the system, help set up some of those frameworks around, because again, an FI is scared that, okay, if I do this, the amount of penalties. No startup was ever penalized by a regulator because a startup cannot afford. None of your startups, if they have a data breach, they cannot even afford 1% of the penalties which any of the FIs will have to pay for a similar offense. So because all the FIs have to face that risk, while a startup can make that mistake, it's okay for them to make that mistake. They don't get penalized that much. So there are relevant reasons for them to be nervous, and which is why it's great that in Singapore, a regulator can say, okay, here's an environment. We understand that when you go into these gray areas, there might be unforeseen circumstances. So if you are doing under this pilot or this POC in this ring fence with this specific controlled set and something breaks, you will not have a $100 million penalty for data breach. That's fine. You will not have a $500 million AML breach penalty if some wrong customer gets onboarded while you are doing a 500 customer pilot under this program. That's fair. But which is why it's not forced. You want to do your own stuff? Sure, go ahead. No one stops. There are enough. In Singapore, there is only one public announcement of a startup saying they were in the sandbox.
Yep.
As per calculation, there are at least 350 fintech startups in Singapore. None of them have come forward accepting that they are in the sandbox. So you're talking about what percentages. So no one's stopping them. It's just that, is it right business case? Does it make sense for your business? Do you need even that supervision? If you're a B2B technology provider, being technically you are just an IT vendor in that scenario, if you're providing B2B technology, you don't need to go to sandbox. A chatbot company doesn't need to go sandbox.
No, that's totally fair. I think you made an interesting point earlier on in the sort of data space and data availability. If you look slightly outside of Asia, right, you can see in Europe the Payment Services Directive version 2
PSD2 yeah.
Is coming out in next year, I think,
Yeah.
where people will actually get access to some of that very core banking data, especially for the customers, right?
Yeah.
It's not the B2B side, but it's definitely a large part of the customer's personal data. Do you see that as coming from the banks, right? Do you see that as a competition is a key part of your leverage in these disruptive discussions being taken away from you by a regulator? Now, I know it doesn't happen in Asia and Singapore yet, but we know these regulations tend to sort of spread.
Yeah, so UK is leading in that front, and even Europe to a certain extent. Having said that, in Singapore, whether PSD2, the non-technical word will be Open API.
Mm-hmm.
So basically what Open API will do is it will take not all the data. There is a common misunderstanding actually that all your customer data will be Open API-fied and available to work by different vendors or startups. Again, that is a sandboxy kind of stuff that UK is trying to do, where a chunk of data which is not so sensitive will give into startups such that two-prong approach. The first, banks will open up their API and build an infrastructure which is not 20 to 30 years way behind. It pushes them to build modern infrastructure system. The second thing, they want to have a clarity in the ecosystem of finance. They want to push the banks to create new use cases, more efficient use cases. And banks, because they're making money already, you don't go to a big guy and tell them, okay, you want to make more money. I'm making already money. Why you are pushing me? So that's why they're creating this, and that the startup will start and churn out new solutions. And in the end, the banks will be leveraging on the startups to provide more efficient platforms or solution to the customer. Whether that will happen on Singapore, for my personal perspective, it is something that MAS is looking at, and it may happen in near future.
No,
But
please go ahead.
But you wouldn't. Would you sort of go out and do it anyway, or implement these open APIs because they? I mean,
well,
the apps
OCBC,
that use these would be available globally, of course. So
yeah.
it's.
Yeah, so OCBC did it. We have our own open APIs, and that number is counting 20 plus right now. But having said that, what are the open APIs? It's not customer sensitive information. It's, for example, ATM locations, foreign exchange.
Fair enough.
Okay, if I put my payment data openly available out there, it's not allowed for me to do that.
No, fair enough.
Right? So what I'm creating over there is an ecosystem for new startups to start thinking about how to do business with me. They can use that APIs. Now there are two-pronged approach again. Open API is publicly available to tell that I'm open to do business with you. Another is closed API, which is behind door. Once you knocked at this door, I will open up something more for you.
Sure.
But then
with customer consent and all that, yes?
Yeah, so that's the angle that OCBC is taking at it.
But the challenge with PSD2 is no one has looked at the commercial viability of it yet. And EU has to face that next year, when after all these random announcements, now question is, you've seen net neutrality happen in telecom world, net neutrality challenges will come in financial services world. All it says is the API must be open. It doesn't say at what price it must be open, at what throughput it must be open.
And the scope.
Leave aside the scope. I'm just sticking to the commercial yet, just the commercial part.
Yep.
At what price? It just says it should be open. It doesn't say what price. I'll charge him $10 per call. I'll charge you $100 per call. Or I'll give him 10,000 transactions throughput.
Yep.
I'll give you 5 transactions per minute. And that will, so that's the whole world, what happens in telco world. So the whole charade facade about, oh, this is pro startup, it doesn't work. Because only the large guys will be able to afford it. The large guy is able to pay so much more. The Netflixes and the Hulus and the Amazon Primes of the world will be the ones who will be able to pay so much to Comcast to get all that bandwidth so that the younger startups will not be there anymore. So the whole premise of setting up a regulation to force open APIs without thinking who is going to take the liability. If, for example, a startup has a breach, who is the regulator gonna go? So if the regulator says, I'm gonna go and penalize OCBC Bank, if any startup which works with OCBC,
suddenly the price would shoot through the roof.
Exactly,
yes.
right? And who's gonna take that lab? And if they say startup is gonna pay for it, then the startup will come to VC like you and say, sir, I need to put a $50 million bank guarantee because if there's something blows up, can you ask your LPs to help me get $150 million bank guarantee?
One counterpoint is that we're also public with a lot of other personal data for no consideration at all. So there might be a disruption in that sort of, in the liability sense there.
But that's the whole thing, right? Today, regulator says anything which leaks here, you are liable.
Sure.
So if either a regulator needs to say, okay, here's an amnesty. If any of your startups blow up, you're not at fault. That's not going to happen.
So are we then forced to sort of move in lockstep, startups, regulators, and financial institutions sort of slowly forward without disruption?
See, it's not a question of slow or fast. It's a question of, are you moving sustainably?
I was more making the point about lockstep, whether that happens quickly or slowly, but is it a sort of a conjoined movement towards this?
Yeah, it's a conjoined movement, and we have to be very careful here. We are talking about the biggest industry in the world, right? We are talking about money. If something blows up, at the end of the day, the reputation, also the customer's money is at stake. So disruption, what happened 20 years behind or 15 years behind in Silicon Valley, that can't be exactly replicated, or e-commerce has to say. People give their, return rate of e-commerce. You create a Lazada, and you can get the money back probably in 3 to 4 years. The amount of money that you invest is huge, and after 5 years, you can't start making profit. But in finance, if you talk about that amount of profit from a fintech perspective, it's not even that period. So the disruption speed, to be honest, it has to push by somebody who is greater than bank, who is controlling the bank, and also the government. And that's why I keep repeating it. This ecosystem is pretty key for these fintechs to succeed. And the liability part over here, this has to be a calculative measure, not only by a regulator, but the bank and what the startup can do.
And startup has to have an empathy for that as well, in some sense.
Yeah, so that's the culture that has to be driven.
And going back to the AI piece here, do you see that as sort of being, when it comes to fintech disruption, right? Is AI ahead? Like, is that where the fights are being fought, or is it that sort of coming later? We're still waiting to see. It's a nascent, because ultimately, finance has its own regulatory and other constraints in where you can use applied machine learning or AI. In regards to unbiased, you can't use black boxes entirely. It's going to be hard to explain your models to whomever you're selling them, whether that is to,
So for example, approving loan. Your algorithm goes crazy. You start giving loans to people who don't deserve. So which is why it's a question of, even in financial services
or you
industry,
start just giving more loans to women because they're better at paying back.
Oh, no, but
which is also not cool.
But,
right?
but the whole idea is, if the algorithm goes crazy, or it's intentionally made to go crazy,
you never know.
To just discount certain factors, because then if the algorithm is going to decide whether person X should get a loan or not, and the bank wants to boost the profit, they just start giving too many, they just relax those. And when it's traditional,
and hide behind the black box.
Exactly, and hide behind the black box, because when it's rule-based, then it's measured. But now they say, oh, system is measuring it, we don't know, we don't control it. And that's a perfect recipe for disaster. But however, talking to customer on a chatbot, we're understanding the natural language queries, which a customer is asking, what is your loan quote? When is my bill due? How much money do I need to save to do this?
That's far less.
That's that's okay. And that's also AI. That's also machine learning and everything. That is fine. But when it comes to taking the specific decisions or denying credit to someone, and the person then filing a complaint saying, give me justification on this reason why you denied this. Or worst, losing customers. Your card, the algorithm thinks this is suspicious transaction while you suddenly went on a vacation. They block everything. You are stranded in a country with no money. And then you come, you're a tier 1 customer, and you block this account now. This bank has crazy algorithms. They just stranded me in a country with no money.
Yep.
So again, it's a mixed bag which way it goes.
So that is the human in the loop problem, right? Is there an opportunity to, beyond the sort of fringe customer service use cases for AI, is there an opportunity to do more cyborg, I get some machine feedback, but the ultimate decision is taken by people, right? Whether that is loan applications or trading decisions.
Hybrid model where the machine takes the first shot and the gray areas go to human, something like that.
And that would be the way into the more core pieces of FIs.
Yes, because a full machine, a black box, is very, very tough to explain and very tough to justify, especially when the bad guys start to use it to hide behind it.
So it's about efficiency at the end of the day.
Definitely.
Okay, and AI does bring efficiency to the system.
Even at 90% effectiveness, because you can cut away, that's 10 times more throughput, right?
Yeah, so that percentage is arguable based upon use case again.
Definitely.
So we are in AI, we all know that what's the variable, right? There are a lot of variable factors over here. So when we talk about particular use cases, if we are talking about high frequency trading, for example, AI is a clear winner. But right at the time when you click the button buy or no, you can't decide that click up the button on AI. There has to be a human who is augmented by all the analyzed knowledge, which you used to take 1 hour to make a decision, but he can make the decision right now in 1 minute. So that's the kind of framework of mind that each of these financial institutions are looking at. Talking about chatbots, the world has moved on from querying something in the Google and getting a 10 page and going into those, clicking into those websites and getting the information. The world wants now, I'm querying in person, give me the insight within that specific answer. And that's how the banks has to evolve the way customer wants it. Yeah, we are a bit slow, we all agree in that term, but also that's the push. We have to move the way customer wants it. Customer wants it rapid, and we all know AI can help in it.
In the interest of drinks and time, would it be fair to summarize the discussion as you think that fringe use cases for financial institutions apply runaway, totally free to work with startups because it's not core to who you are? For the more core pieces, humans in the loop are probably there, and it's largely going to be driven by customer and regulatory sort of interest, and to some extent, financial institutions' own financial interest as well.
Absolutely, and at some point, if they can open the standards, so if the black box is openly available, that okay, this is how the black box works, then probably it can go to some other use cases. Or for example, let's say fraud detection in payments. If all the card schemes or the banks come together, they say this is a central system we're going to use to detect frauds, and all the banks or large number of banks and card schemes are together using one core system. Like for example, there's an Interpol registry for criminals. If they use a common system to detect it, then they know that one financial institution is not taking that as a shield to hide behind, to hide
and
something.
it levels the playing field because you're going to get the same declines for every bank, right?
Exactly.
Fair
So
enough.
that way, that approach is slightly more doable versus one individual black box models.
Any final
Technically
comments?
speaking, this is the way of standardization what he's referring to, and banks are very competitive among each other. So if we say that each of these banks will form a consortium and do it, from my perspective, it's not going to happen unless and until there is a genuine threat. And that threat can come from the top, which is your regulator, or the market, who is your customer.
But there are areas like fraud. Fraud is a problem for each of the banks. Each of the banks will be hit by a fraud guy doesn't care which bank card it is, he's gonna still attack it. So
or which bank actually accepts the transaction. So there is benefits to actually collaborating in that particular case.
Yeah, and that's what has been happening since past 1 year. If you see in the blockchain era, there is R3 who formed a consortium and they're forcing the banks. This is the way payment will work for you. Okay, and they are moving in the direction where the standardization factors will be agreed upon a group of customers, group of banks, and then each and every bank will just adhere to it. But having said that, it's not global. It's again use case based.
Yep,
Yeah.
I totally agree with that. It's a good final comment on the moving forward from the regulatory side, right? How you can enable the revolution in fintech from the top.
Sure.
Thank you so much for your time, guys.
Thank you.
Thank you.